Morning. Welcome to Dornbusch download number 130. Unbelievable, 130.
Yeah, morning, Dan. Yeah, they're ticking away, aren't they? Absolutely.
Ticking away, Michael. Thought we'd talk about exchange-traded funds again this morning, Michael. What do you reckon?
Oh, look, they're certainly becoming more topical, aren't they? And just the raft of different products and different access to markets that can give clients these days. They're certainly becoming or have been flavour of the month now for a little while. So there's been a couple of good international ones too that have sort of hit the interest box, I suppose. So
it is interesting what's happening in the States and Europe too, isn't it, at the moment? And that's sort of pushing a few buttons, I think. And Michael, we saw that in leading up to the global financial crisis, didn't we? When the ASX 200 our market was powering along, interest rates were going up, inflation was going up, wages were going up, wasn't it? And that's what we're seeing in the US now. So, and if Trump can sort of loosen those strings on the red tape for business and the other things like the infrastructure and that he's doing, it all sounds positive for the States, doesn't it? So. And on top of that, there's also reports that Europe's starting to tick along again as well now. So I think I saw the PM Capital Chief Investment Officer was saying that, and out of the blue, Spain is really starting to kick along. So, exchange-traded funds over US stocks and perhaps European stocks could be some potential for growth there.
Yeah. And I guess too, I don't know what the latest maths is, but I know for years, the Australian share market represented, I think it was 1.5% of the total capitalisation of share markets around the world. So, our market, albeit, we've got some very good companies, no doubt. We're sport for choice with over, 2,000 odd companies. But we are literally a drop in the ocean compared to, what else is available. With the US market, of course, being the biggest share market, stock exchange out there.
Yes.
But you're right, the accessibility to Europe now, a lot of the other Southeast Asian countries, myriad of different sector-specific ETFs, you can get technology funds and bank funds and
pharmacy companies.
Consumer staples. It's just extraordinary. But the Europe ones come up on the radar, hasn't it? As a bit of a prospect. Yeah. So
doing a little bit of work. There's I think 4 or 5 available. I've been looking at that Better Shares one, HEUR, something like that. We'll put a chart up on that one.
Yeah, the wisdom tree.
Something like that. Yeah. The other one that I like is the banks, BNKS. Banks always seem to make money, Michael, don't they? They're trading at about $6.64. That's pretty diversified as well too. The US and Europe, but it's also got Asia in there, Canadian banks. So it's not bad on the diversification side of things.
Yeah, absolutely. And the banks do write the rules for making money in a lot of respects, don't they? And there is some good value. I mean, that the financial crisis, some of those US banks, some of them fell off the radar altogether, of course, but they were massive devaluations whilst all that was happening. So, and as you say now that there's been a bit more encouraging news coming through, there's still some good value in those sectors to be.
Their earnings, their PE ratios really aren't all that high either. In saying that, neither are our banks at the moment. Even though they've had a solid run, they're still only around the 13 times, aren't they? So that they're still reasonable value from an income point of view.
Yeah, absolutely. No, it is. It's always hard to go past our big 4 banks, oligopolies, still make pretty good profits, record profits it seems year in, year out. But the dividends and the franking credits as well are very enticing. And I guess that's always a bit of a downside, isn't it, with the global stuff? Is you typically don't get those good dividends, do you? And certainly not the franking credits.
It's really growth and diversification in the portfolio, isn't it?
Yeah, absolutely. But certainly, and we often have it, don't we? Clients calling up wanting to buy Apple shares or Google shares or GE shares or whatever the case might be. And the process buying international shares directly is a bit of a tricky one, bit of a pain.
Yep.
But
And
these
especially in
ETFs are a good way
self-managed
to do it.
super funds, Michael. Sorry to cut in, but if if the names don't match, then the auditors are sort of looking over the accountant's shoulder, aren't they? So it's hard in that regard.
Oh, absolutely. Getting 30 June valuations, all of that
Yes.
sort of stuff that your accountants and auditors want to see ticked off on.
Yeah.
These ETFs, do suit in that regard. But of course, like everything, there is that compromise, I
Yes.
suppose. So,
You're paying a fee for it, etc. So,
yeah, exactly. But no, we've just got a little list there that I think there's around about 80 of these things out there now. So again, we're spoiled for choice. But again, overseas markets, there's a lot of opportunities there. They've seen some pretty tough times, a lot of those markets, and some of that value is still there, and with some signs of a heartbeat, I guess. Probably one thing to bear in mind as well is we often like the ones that are domiciled here in Australia, because you don't get all those tricky W8 Ben forms and that sort of stuff. So, there is a bit of a screening process that we do. Anyone that owns ResMed shares or stuff like that would have seen these W8 Ben forms, and they're bloody complicated, to put it politely. But
it's short for Ben Bernanke form.
But certainly if they're domiciled in Australia, the ETF basically takes care of all of that.
It's marvellous.
It's pretty straightforward. So, that's probably seen us through.
Probably has. We should mention Plato, Michael.
Yes.
We've got access to a listed investment company called Plato that is really there to dividend strip, I suppose, out of the ASX 200. As a managed fund, they're paying about 7% per annum paid monthly. And then franking credits on top of that. So they've decided to put a LIC together, and that floats the end of April. So we're putting a hand up for an allocation there. So if you're interested, please talk to your advisor. I think the catch with that one, well, there's two catches, isn't there? They're not going to pay a dividend until September because they want to put some cash away so they can start get the dividend payments rolling, and they're not going to dividend reinvest on that. So it's just the cash payments.
But it is a monthly payer, I think, too, isn't it? Yeah. So you will, once they kick off, you will get your distributions nice and regularly. And we were saying before, it's probably not dissimilar to the beta share harvest.
Dividend harvest.
Similar sort of process there. Whereas, this one will be a listed investment company as opposed to an exchange-traded fund. So the structures are slightly different.
Harvest is in the ASX 50, where these guys are in the ASX 200, which provides a bit more scope, though, doesn't it?
Yeah, absolutely. So, so if Plato sounds of interest, just give us a call, and happy to give you the good oil on that one.
Very good.
Thanks for watching.
Else?